Hello, family. Welcome to today's lesson. So, today we'll be looking at fair value gaps, how to pick high probability fair value gaps in the market. And currently, the pair we'll be using for this scenario is the USD CHF. So, just a quick analysis here on the 1 hour time frame. And the first thing I'd like us to notice, so we can see the market over here was in a bit of a consolidation phase. We are seeing it being a little choppy, it's less free, and then we see the free fall right here. So we want to start our analysis from this angle where the break of structure occurred. Now the reason why I'm selecting that side as our resistance is because we can see there was a test here, market went up, came back, another retest on this zone, so it acts as our valid resistance zone, because you can see that the market was actively trying to break through that zone, tried several times, failed, came here, we saw the sharp move to the downside, went back up, and then finally broke through that resistance zone right there, leaving this fair value gap that will be anticipating for the market to move right back into it and then sell or have a free fall, whatever. But we can see here, after that break of structure, there was an accumulation phase around that zone, and then we saw that free fall. It didn't go back to fill in the fair value gap, and we see this happen again. Break of structure, fair value gap created, market trades and doesn't go into that gap, continues to move to the downside, and it keeps on happening. When you look at it particularly on the 1 hour charts, gap created, the market is in a free fall. So one thing I want you to understand is that with fair value gaps, there are different scenarios you have to look at them at or with, because when it comes to fair value gaps, mostly in the consolidation phase, the market tends to respect them a lot. But when you're in a free fall, the market tends to create a lot of imbalance, leaving it and then coming back to correct those imbalances in the market, like what is happening now. So the first thing I want you to notice is that ideally we're anticipating after that break of structure that the market will move into that fair value gap and then we get more sales, but it didn't. So we see there was a bit of an accumulation here. So on a lower time frame, we see that will be more of a support and resistance zone, and then we see that the market just goes straight right through it. When we see this candle to the downside breaking structure beautifully without any hindrance, that is a signal for more sell side. So we do not have to anticipate it going back immediately to this fair value gap for us to get our sales. It just tells us the market is in a free fall, looking at this, because it's a bearish market. So the market is in a free fall. Once this other structure has been broken, we forget about this fair value gap and our focus is now here. So at this point, we are now looking for the market to trade back into the fair value gap, which it didn't trade into, and we see that free fall continuing. An accumulation phase goes down, continues. So for typical traders, you can pick your sell right here. Immediately you see that break of structure, you can pick your sell right here. The reason being because we are anticipating for the market to move back into this fair value gap, but it didn't. Getting this extra signal makes us aware that this is likely to be a free fall market. So immediately that break of structure occurs, we are looking for a sell, and our stop loss would be above this high. so probably around here, and then I'll take profit to be at a significant low, wherever a significant low of your choices. You just pick that out. So one thing I want you to notice is that in our original scenario, we're anticipating that this fair value gap is filled after that break of structure, which didn't happen. So for traders looking for that in this kind of scenario, you wouldn't get what you're looking for. So we see that happen again and again till the market decides to retrace. So now we see this pullback happening right here. And one thing I want you to notice is this beautiful fair value gap that is created and this short wave to the upside. Okay, so right now we see that structure has been broken. And this kind of scenario, I wouldn't be looking for a buy just yet, even though we are aware that there's a lot of imbalance in this market because there's a lot of fair value gaps that were created that were not filled. So in the long run, we are anticipating that there's going to be a move back to the upside to fill in those gaps. But when that move is about to occur, we might not know. But looking at the chart patterns, we might be able to identify when it's likely to occur. So looking at it from this angle, we can see the structural point was broken right here. We said that the market moved back down, retraced, a little bit of an accumulation, goes back. So we can see that the market is being a little choppy right here. That makes us know that it is in an accumulation phase, and it was aiming for this fair value gap right there. Came close, didn't hit it, didn't fill that gap, went back up, broke the structural point right here. What am I calling it that? Because you can see that there was a bit of a resistance at that level right there. A bit of a resistance at that level. Market broke right through, retraced, went down, came back, traded above that, and the market is moving to the upside. So looking for significant fair value gaps in this market to take your buys, this is the fair value gap you'll be looking at. And you know what gives me extra confirmation that it might be time for you to move and fill in those gaps that it wasn't able to fill is we see a break of structure here, a pullback, the market moves back up, goes back down, and we see another move to the upside, break structure again, and then we are seeing a pullback. So we are seeing a pattern being formed, creating series of higher highs. So with that being said, moving in, we can see that this was the fair value gap of interest in this buy or this short move to the upside. So we can see that there's no fair value gap created right here. There's the only fair value gap that was created before that break of structure. This is our fair value gap of interest. The market comes back in, trades into it, trades out of it a little, and then we see that sharp move to the upside. So even if you miss this, we can see a resistant pull right here that the market just moves straight out of. So that bullish momentum to the upside breaks through that resistant pull right there, and then we see that the next candle wicks goes retest the zone, and we see that sharp move to the upside. So currently I'm anticipating that there's going to be more move to the upside to fill in at least this fair value gap right here. The reason being that because there's a solid order block here, and we'll talk about that, how to identify high probability fair value gaps more, even using other blocks. So thank you guys for staying to the end of this video. See you in the next video.